Hi, Warriors. Midweek hump day. How are you? AJ? Bran? Hail the coach who brings uncertain times to trading. Thank you. It's not my fault, man. You chose to do this. Don't blame any. Anyway, hi, Ingmar. Kay, how are you? Scott. Scott Williams. Seems like a new name to me. Hi, Scott. RJP, Steve, Michael, Andrew. All right. So we have a little weakness in euro and cable and euro pound, which I believe Kman is still on. So uh, it looks like there could be some type of base being built for a correction in the dollar. They're talking about it last week. That's pretty ugly in euro right now. And I was looking at EGK and path of least resistance on this. Looks like at least we're going to take out this 82.60 low. We'll see what happens after that.
Good
Um, good
morning, Dale.
good morning, buddy. So is that kind of the way you're seeing it? We get another new low. I would say this. This is why I didn't think the low was in. Now now that I have RSI back, it was a confirmed low. See this low and this low. Real low readings under 30. They rarely bring bottoms. But
Mm,
this time, if we take out this low, watch the RSI. I suspect it'll hold above 30. It'll RSI will put in a higher low. So anyway, because a higher low isn't actually even going to be the low of the move, is it, buddy? So here's the daily. So the low of the move's down here at
mm.
82.23. You think we're going for these levels here?
It's possible that I don't know. You know what? I mean, we are in end of month now, and if
Oh yeah,
we really look at what is potentially happening, I would say, yeah, we could end the month on a low in euro sterling. I'm actually back into a little short, but just to sterilize a few dollar shorts that I had. But yeah, it's 80, 82.60, 83.05. Bit of a range there now for me. Not so sure what's going to happen in March with the sterling, but I think come March, I'd say maybe I would prefer being long cable than short euro sterling. I don't know
okay.
if that makes sense. But I mean, everything needs to be seen. It is a fact that bounces. Well, it's a slow market as well in the euro sterling because we're talking about 40 pips range in what is it, a week, 2 weeks now or so. It's still a very slow market, but it's not. It does not look like a market that is ready to bounce really, right?
Yeah.
It's the range is not too wide, but yeah, bounces are getting sold into pretty rapidly. Every time we reach 83, just above, we see some sellers there. It's still not telling us that we are going to reverse for a higher level. That's for sure.
The Dixie to me, was I thought there was a possibility of another new low
Mm,
to challenge us for a three drive. Here's one, here's two. They don't always have to do that, so it may not do it, but maybe it does it on the PCE. But if to me, it looks like this market wants 107 and a half, and that's where it has to fail, or the bear market and the dollar is put on pause because we start getting through 107 and a half. We could even retest this level, the tariff day. So I don't know.
and we're potentially having some announcements over the weekend to start
Yeah,
March,
yeah.
right? So
I wouldn't go home short the dollar, especially if you don't get a big lead from
mm,
PCE and it accelerates, like the euro accelerates to the upside. It couldn't even make a new high.
Mm.
I'm not saying it can't, and euro and cable wasn't close to it, and Aussie was the tell yesterday, and it's going to head down into this zone.
Yeah,
The six
I fear
now
for
I
it.
don't know if I want to buy it down there.
Um, yeah, I'm
Yeah.
still eyeing that zone. And yeah, I was a bit long Aussie, and yesterday I thought Besant was talking it up as well. Uh, Talking about Australia as their partner and not doing anything bad for now. But then I
Oh.
realized only after the fact that he was talking at the Australian embassy. So I said, okay,
Oh.
maybe it's just to be Mr. Nice Guy for once. But no, the beat tone has dissipated a bit. But again, as I said, we can't look beside what happened in risk as well. The commodity currencies are also affected by what's happening in risk.
And
Yeah,
tariffs.
both Kiwi and Aussie are less buoyant than they were over the past sessions. Yeah, that one. I mean, there's so much pressure on Canada right now. I mean, every politician in the White House and the adjacent buildings are hammering Canada. And it's probably also not been helped with oil coming down, right? Although that correlation is a bit random, but
Yeah.
yeah, there's a lot pressure on Canada right now. But then we'll have to wait what happens over the weekend. And again,
Yeah.
I mean, is he going to slap those tariffs? Is because yesterday Navarro as well, he was saying that they want to kick Canada out of the Five Eyes military cooperation, and that's another negative, you know.
Yeah. And this WTI break to 68 was something Blake talked about yesterday, where it's really not a breakdown, and I'm sure he'll show that chart. So
Yeah,
this level is pretty important.
it looks a little ugly now.
Yeah,
Okay, so well,
we've been selling for a while.
I'm looking for 62,
Oh yeah.
but
Yeah,
we could get maybe we get you what you were thinking about yesterday. So today's action negated it because we didn't take out 68 by much. We haven't even taken out 68.
I don't know, man.
Remember
This
the
Oh,
chart
market's
you
but
showed?
it's heavy. Yeah, come on, it's heavy like hell. I mean,
Yeah,
yeah.
I know. Well, I'm just bringing up what
mm. But
the
we've been talking
possibility
about
of a
this, right? We've been talking about these the spikes getting lower and lower, and it's still not looking good.
okay.
Mm.
Uh, get to the metals. Gold looks vulnerable still to me.
Mm.
Silver looks vulnerable still to me. Um, we've got new highs in the gold silver ratio. Uh, we are diverging a bit. We got to 93. I was talking, well, 92 and a half. So maybe there's one more surge left. And I guess let's talk about the elephant in the room. I wish Greg was here. All right. The elephant in the room is Nvidia, right? So there's a lot of pressure on Nvidia to come through. It's coming in a bit higher. And this was Greg's roadmap too, rally to the gap, pull back a fib level. I think he had it around here. And, you know, this low should hold. And then maybe we get good earnings guidance and we blow again. So uh, if it's bad and we start taking out 124, the market's really in trouble. Then we'll be talking sub 100 Nvidia. So big day after the close, right, Mick? Right, Blake?
I think it's going to be huge. There's a pull up since you got the charts and I know you guys you still have some things you want to say. Pull up PLTR. This has
Oh,
been the
Palantir, yeah,
Yeah, this
yeah,
has been the Wall Street darling, and this
yeah.
for those of you guys that I actually talked about it on the trade-off last week, and you can see where it stopped today or yesterday. It's right at the big breakout point, and remember the CEO is out there selling. He's out there selling $1 billion worth. No, 100 million. Ah, shit, I forget how much stock he's selling. A lot. He's selling a lot, and then just zoom out a little bit. this is like it stopped right where it should at the mid 80s. If Nvidia gets killed, remember they do a lot of government contracts, but with AI and servers and blah 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 blah. With Doge cutting back on government spending, and if AI spend just in general is coming down, and you see that in Nvidia, just dude, this thing closes below 85 bucks and it's probably going to trade back in the 60s. And
Yeah.
you're getting so much air coming out of this. That eccentric CEO, he's such a anyway, they got a whole clown show behind him.
How,
I think it's a stock that could really just be upended pretty
how
good.
about talking about stocks that could be upended with a Bitcoin breakdown?
Yeah. Yeah,
I
Bitcoin
mean,
that micro strategy. There was a big article in Bloomberg yesterday. I was reading, it was like one of their top stories about just how people are just getting decimated in crypto and these huge leveraged
altcoins.
funds that are going the opposite direction. Yeah, so you got Bitcoin that's consolidating below 90,000, and it's got a big double top. We've been talking about a
Yeah.
big Wyckoff distribution. It looks like it's going back to 75,000. Well, if that happens, what happens to MicroStrategy? What happens to all these, huge leverage ETF,
Yeah.
all these tourist crypto investors? What happens to all those people? I mean, this is all risk aversion. It's all percolating out there right now. So
Lack of liquidity, too. So yeah, there's
yeah,
Bitcoin.
everybody gets to run for the exits at once.
And
You
I
know,
saw Blake, I saw an interpretation if we get the break, and that'll be just right back towards the breakout, right? I mean,
yeah,
this was a breakout.
75,000. That's where we should go.
And this,
That's where the technicals point to. So, I mean, I'm probably going to buy Bitcoin at 75,000, 70,000, somewhere around there. I'm going to buy it for at least a bounce, if not anything. So,
yeah, because this is good. This is supposedly just, this is wave four, which implies another wave to the upside.
that would
So
make sense. That would
yeah,
make total sense. I'll do a little technical work with you a little bit later
okay,
when I take over the charts.
okay. And gold is I've seen interpretations of gold too, even if it pulls back towards this 28 and a half level, that this too could be a four, and then we get another new high.
I mean, if
So
that's a
a lot
wave
of
three, which
fours.
does look pretty impulsive, I mean, it should theoretically hit a new high, maybe above 3,000 when it's ready to go.
Yeah,
Well,
yeah. Then
I
maybe
don't
we need
know.
the
I was just gonna
champagne
say
bottles.
I don't know what will stop a test of 2,800. And I think if you want to own gold, that's the place. Me personally, I mean, I'm not trading it, but that's where I'd be
Yeah,
interested.
prior high,
Yeah.
9 week moving average, basically a breakout. So you got a lot of stuff happening there.
It's a big divergent relative strength on your screen there.
Yeah, that's a weekly.
Yeah.
So we'll see what happens. Silver, I still think that silver's headed down towards this level. Um, down towards 26 and a half now, because this line keeps extending the longer. Just really something like this from here takes it down there. And this is supposed to be the end of two, okay? And the wave up from down here is three. And I know just enough to be dangerous in Elliott, but threes and C's are the waves, they're the money waves,
Yeah, they're the big
because
ones.
their
Right.
fib extent, they usually get a fib extension of one or A.
Yeah.
So, 1.618 or something like that, 1.32, 1.27, but bigger than the wave it's mimicking. So
Yeah. Yeah.
I'm going to give you the charts because I've talked for half the session.
Oh, well, thank you.
I'm,
All right.
uh,
But
well,
well, no, I
I
appreciate.
won't stop talking.
No, no,
Anyway,
it's all good. The thing is when you come in the mornings, for those of you guys that are Forex Analytics subscribers, go over here where it says updates timeline. You can see right there's you got your live squawk feed. You just cruise over here to where it says update timeline. you can see all these patterns that have been set out this morning. Like you can see some of the harmonic patterns that are being set out with like here's the Swissy. Here's a basic technical analysis. This is 30 minutes ago. With silver's sitting at channel support, which, by the way, if we break through this 31, 30 level, it's going to open up some, or 31.30, it's going to open up some downside, I think.
Yeah.
But you can see all the different updates. The elephant in the room for me is in FX is the Canadian, and this one, I let go of mine yesterday at 143 because I'm trying not to hold positions overnight. Trying not to. I mean, I've done it. I did it the other night when we broke through 42.60 just because it was on some tariff news when Trump was like, we're going through with these tariffs, and the market's like, yeah, prove it. But it is. You can see the market's like, okay, well, maybe he means business. And the dollar CAD continues to stretch its legs. As you can see here, we have a pattern in play. I adjusted it though. I adjusted the target level to 143.94 for those of you guys that are still long. And the reason why I did that is because that is it's a 38% retracement, and I think we need to get past. We really need to get past. It's right here. We really need to get past this weekend to see if it's going to extend. And now I personally think Trump's going to move forward with tariffs. I really do think he's going to, but we haven't seen evidence of that, in the last couple of weeks. So you got to, so if you make it to the 38% retracement before Friday, you probably want to, shore up some short Canadian positions there. But it's not just the dollar CAD. Take a look at some of these other Canadian pairs. Like, you look at the Euro CAD. Euro CAD's, been a bit of a screamer. Sterling CAD has been a really nice one, and you can see we're nearing these highs here, which I mean this gets dangerous with the Canadian currency. If you see pound Canadian rip past these highs, it could get quite ugly for the Canadian currency. So I think it's something to be keeping an eye on. Another couple of things is the Aussie has really slipped. We had CPI last night. And it came in a little weaker than expected. And, everybody's looking at the RBA and rate cut expectations moving forward and wondering if the RBA is going to be able to, continue to cut rates, or are they're going to have to fight some inflationary pressures that we're seeing, kind of percolate everywhere else. And, last night allowed for the Aussie to continue to slip, but we're at some pretty, I think around the 63-cent level is pretty important support. Don't forget, we did have a false breakdown that gave us the breakout. So that's already, done and gone. So now we have to be looking for pullbacks to be on the long side of the Aussie. My biggest fear is that, at this stage in the game, we are starting to see risk aversion. We are starting to, everybody's, like Dale pointed out, everybody's kind of focused on Nvidia today. And then you have, Bitcoin that's looking weak. You got MicroStrategy, as he just pointed out. The copper's rolling over a bit. So, and then we can talk a little bit about crude, which, you were just discussing. And I would, like you, I was like, oh man, it's hard to trade crude because the thing, just every time, up until yesterday.
Yeah, it took out that was the line you were talking about. Yeah.
Right. I mean, but you look at like the previous couple of weeks, every time it dipped to that trend line, it just got bought. And this is a big broken trend line. You can see it just like that, right? So every time it dipped to that trend line, bought. And then yesterday, it finally cracked. And so now, because it cracked, I'm a little worried that, people are starting to think, the Trump 2.0 excitement is over. You can see it in crypto, right? You look at crypto. Crypto's weakening. U.S. exceptionalism. Go take a look at Tesla. Tesla's getting destroyed now, and sentiment is turning on everything that has been the Trump trade.
The stars.
Right. And so now I think that the Trump administration probably wants weaker, energy anyway. But I think this is going to be not a result of what the Trump administration wants. It's probably more of recessionary fears that are going to build here. And so, see this lower trend line, this one right here, that comes in like basically $68. We start taking that out, and then Dale, that's when you're like, oh, I see 62. Yeah,
Yeah.
like why wouldn't we go down there? If that level breaks. So
Yeah.
I'm with you there, especially if we start getting a foothold below $68. I think it really opens up some downside. But I noticed Steve Valgadis is here. Steve, how are you? Good morning.
Good, mate. How have you been?
Good. Every day is a good day. Every day, as they say,
Above ground, you mean?
is a good day. So, what's going on in your world, and what are you thinking right now? I know you've been looking at the dollar quite a bit, with it being your chart of the day the other day, as we're at some pretty key levels. How are you feeling about the markets right now?
Unfortunately, F.A.C.E is still stuck in a very tight consolidation, so still in wait and see mode. Equities have definitely taken a hit the last 3-4 trading days, and they have obviously affected cryptocurrencies as well, because they're the riskiest of all assets. Right. Gold, finally, after many days of toying around with resistance, turned lower yesterday, and depends on what the dollar does. If the dollar holds here, it's currently on key support, and rebounds higher, we might finally see metals, especially gold, produce some kind of a deeper pullback. So while F.A.C.E isn't doing much, it's still worth noting because dollar is on key support. But equities, in my opinion, are currently in the spotlight. I'm looking to see if we're going to see some follow through in this risk-off move that started at the end of last week.
All right. Well, yeah. I mean, as we've been talking about Nvidia, I think that's going to be the focus for everybody today, and it's going to be hard for Nvidia to. I mean, expectations have been so high for so long. They have to be really, what's his name? I'm trying to think of the CEO's name right off the top of my head at this early in the morning. Well, anyway, he's really
Captain Kangaroo.
Yeah, there we go. He's really good at pumping up the market and saying all the right things. So to get bearish Nvidia right now is it's hard. And I look at the stock, and you were just talking a little bit about it too, Dale. I posted this also in the S&P and indices and stock market chat room that we have in Forex Analytix today. But Nvidia, yeah, I mean, we had a nice little gap fill, and this is going to be channel support, and I think we get below this low, and man, that's going to open up all sorts of downside, and it's going to weigh heavily on risk, I believe. I don't know if what implied volatility is showing us today, but I'm assuming we could trade based on Nvidia's past. We could trade to the upper or lower end of this circle that I'm drawing, and you'll notice we're right at the midpoint, and that's like most stocks ahead of, or most anything ahead of a big event. You're in the middle of what could be the upper end and lower end of the range, and so I think there's some risks that are percolating later today.
Gun to head, I'd buy calls. And the big question is, because if we turn here and Grega's count comes true, we have new highs coming, and it's an ending diagonal up at about 160 or so. Your top line will be the top of the diagonal, and your bottom line would have more of an angle. Maybe anchor it against the low, so it has there you go.
Something like this.
Yeah,
maybe an ascending wedge. Yeah, I mean, if it does, it's still got a lot of work to do. If that's truly how the market's looking at it right now. It is hard to bet against, but you also have to be very, very careful with downside.
I like betting against it.
Yeah.
Stargate. That's what I.
Hey, So today, as far as economic data goes today, we have some new home sales and crude oil inventories, which I don't think is a big worry. We were chatting in the chat room about the G20 meetings. So finance minister starting today, and Treasury Secretary Bessent's not going to be there, and I think his the
Wow.
assistants dog handler will be at the G20 representing the United States. So there's not going to be any U.S. representation there, which is kind of a big,
No internationalism anymore.
it's going to be a big FU to the
Yeah.
international community. So yeah, just everybody there is probably freaked out about a potential trade war, and Treasury Secretary Bessent's
Well,
not even
President
be there.
Trump
So.
wanted to bring Putin to the meeting. So
Maybe the G10 or
all the
G8.
G's, they're
All the
buddies.
G's? No, I don't
Yeah,
know
yeah.
about
You
the
just
finance minister. They don't. He's not going to be popping up at the G20, but for the finance ministers. But maybe at
I
the
hear he's
G
throwing
later
out the
ones.
first pitch this April at the Yankee game. Putin.
Oh geez, oh geez. So hey, real quick, I want to ask Kman, since we're going to be wrapping things up, and I know Dale's got an interview coming up. Kman, what are you looking at today? I mean, we're seeing a little bit of a wedge developing in the euro, as Steve just pointed out. Nice little consolidation in FX right now. Do you have anything that you're really focused on at the moment?
Well,
Yen. Talk yen.
yeah, the yen. Sorry, still big support zone euro yen 155 and a half, 156. But I've noted also that from the start of the week, every bounce above 157.10 towards 25 has been seen seller. So we were wondering whether it's month end or really something bigger. For the rest, and yeah, I'm still relatively positive on the sterling, all in all. And I'm waiting to see if we get that final drop this week in perhaps the Aussie, Kiwi. I don't know yet. But yeah, I'm looking to perhaps counter dollar strength if I see it towards the end of the week, or
All
even
right,
today.
and remember, we do have a corporate month end today. Maybe that was some of
Value
the
day
dollar
today.
buying that was coming through in Europe, earlier, as we had the euro push down towards the 618. And then, what do we have for month end? And I mean, that's takes us all the way up until Friday. What's the expectations right now that you've read?
As we stand right now, it's a light, very light, should be light dollar buying versus euro, but yen should be bought in theory. And the rest, I think there's not enough of a how shall I say? There's not enough clarity to go all in on a month end. And let's also not forget that a lot of those money managers or FX neutral funds, they are now hedging way before as well. They're
Yeah.
not waiting until the last day. We have seen another example of that last month, where what the models were thinking worked until the last day before the real month end, and then on month end itself it reversed. So just be careful about that. But today, who knows? Perhaps a few dollar buyers coming into the London 4 p.m. fix. That's possible. But yeah, I'm not looking to initiate that much right now. But I hope that Dale is right, that there is another leg lower in gold, because I'm waiting for it. If I get anything close to 28, anywhere between 28 and a half, I'm going to get very, very interested.
All right. And just because I forgot, I mentioned to Dale when he was talking about Bitcoin, I just want to make sure that everybody sees like the longer term picture view. This is the long-term cup and handle we've been looking at for a few years. We were always targeting above 100,000. We reached above that. That's the actual target from the cup
Yeah.
and handle. If you guys, don't see it, it was there from, this is my chart's been the same for years now. But this is a big distribution pattern. I've talked about it on the week ahead video. 3 weeks ago, 2 weeks ago. But you can see it pretty clearly now. You know, back then we were just brushing up, you know, just made a failed rally. The failed rally attempt is this one right here. You can see that was the buying climax. Thanks, you know, Trump's going to, you know, be elected, blah, blah, blah. That was the failed rally. We just broke, so we did the break the ice. That happened. And now we're looking for any move back to 90,000, which is happening right as we speak, to take us back to about 75,000. And that's going to be the markdown effect. Now, the question is, will Bitcoin find buyers on this dip to 75,000? Well, you're going to find me, but that doesn't matter for anything. And I'm sure there's going to be a lot of people trying to buy Bitcoin at that breakout point. Whether it's sustainable or not is to be seen. But that's there's your big picture of Bitcoin. Plus, you got a double top, which also extends to 75,000, and also this is the maximum triangle move, not the minimum. It's the maximum, which could take us all the way to 75,000 as well. So that's where everything's kind of pointed. 161% extension, blah blah blah. So there's a lot of stuff that's pointing us down there. And so think about that. If you own crypto, you trade crypto, just kind of, you know, while Bitcoin's trading below, I would say anywhere below like 95,000, you got to be defensive now. So anyway, that's the look there. And Dale, I know you have an interview. So guys, just remember, this week continues to get busier as the week goes on because we have Nvidia earnings tonight. We're going to be all over that in the Forex Analytics chat room. Tomorrow is going to be U.S. preliminary GDP, unemployment claims, durable goods. So there's going to be a lot happening as exactly 24 hours from now when the news comes out. We'll be covering it all live. And then obviously PCE on Friday. We do have German preliminary CPI on Friday morning too, for those of you that are following along what's happening in Germany. So Kman, thanks for holding down the fort. I know hopefully Ryan's sobered up after his heavy metal concert he was at the last 24 hours. And Steve, thanks for being here. I'll see you on the Morning Edge in about 45 minutes for the Forex Analytics subscribers. And Dale, it's all you, man.
Thank you, Blake. And thank you, Steve, for your guest appearance, your cameo. It's always nice to have always. It's nice to have you. And Kman, thanks so much. And the Dream Team continues to spin out good, compelling information to guide you guys out there. And I have another gentleman who said that the S&Ps would not top before his next appearance. Right, Arno? And
that's correct.
All right. And, you know, here we are. Was your scheduled interview a week late for that prediction, or do we have more to go? Oh, here we go. There's the picture. All right. So great to have you back. Arno has been spot on about what's been happening in the S&Ps. He's been sanguine for a long time, and looks like he has some interesting counts here. So
thank you.
Go ahead, buddy.
All right. Yeah. So, you know, we always want to go back a little bit to where we were. And this was from our interview in November. I pulled it up. And I think it said here in the headlines that I was looking for a wave 4 pullback and then expected 6,200 by the spring. And that's pretty much what we got. We were looking for a C wave higher, as you can see, to about 60, 61, and then a pullback to about 57, 27, ideally, right? These are just all ideal numbers. The market, of course, deviates a little bit from it. And then a final rally to that 62, 6,300 level by the spring of this year. So that was November. And what did we get? Well, we got a top here in December at 60.99. So that's not too far off of the 60.69. And then this pullback here to 57.50, somewhere around there it was. So that got awfully close, right? So this is what we were expecting. I mean, this is very, of course, stylized, sterile way of looking at the market, these arrows. There's, of course, a lot of daily variation and weekly variation that we simply cannot forecast, right? This arrow here in red from November.
Especially now, right? Arno, with
especially now.
The news flow. Yeah.
Yeah. So this is just, you know, exemplified with one red arrow, but you can see the up and down that are going on, which are really difficult. By the time you're somewhere here late December, the market could have bottomed. It decided to do it what we call a double zigzag in Elliott wave terms. So you got the A, the B, and then another ABC. You might also call it a WXY. Very complicated, but the general path and trend is still there. And then we were looking for this rally here. Now the question is, did we already top quite shy of that 62, 6,300 level that we already pointed out?
We got to 1.5 close, right?
Yeah, 6150 or something right there.
Yeah,
6147, whatever exact number is. So it fell a little bit shy. So that gives me pause for the bears if that's the case. We did reach the numbers within an ending diagonal. So our thought since the August 2024 low is that this is a ending diagonal fifth wave. So if we go to the Elliott wave, this is my website, intelligentinvesting.market, and you would go on, click on menu, and then you go to education, and you click on the Elliott wave principle. It will pull up the Elliott wave. That's primarily what we use.
I love ending diagonals. It's my favorite. It's my favorite Elliott pattern. Because it's a turning point.
It is. It absolutely is a turning point. So this is then here the August low on the left-hand side, and we think we've just completed this wave 3 here and wave 4. Of course, again, this is very stylized. This is very idealized, and all the daily scribbles, of course, make it look a lot worse. So we're in this wave 4. Now, this wave 4 can make many twists and turns and patterns, but that's what we think. And that we are now in this last final fifth wave. And as you can see from ending diagonal, it's all ABCs. ABC, ABC, which makes it very complex to trade. But normally the third wave tags the 123.6% extension, which is where we got pretty close, maybe a little hard to see here, which is the 60.69. I think we got 60.99, so that's awfully close. And then the fourth wave tends to go to somewhere between the 76.4 and the 61.8, and that's exactly what we got. And then the fifth wave tends to go to at least the 61.8.
Is your contention that yesterday's low after that big sell-off is two of 3? It completed.
It could be, yeah. That's the example.
And now we're on our way up, and now we're on our way up to 3 of C.
It's very possible if yesterday's low holds, then this wave 2/B is complete. We don't know yet if this red wave 5 will subdivide further into 5 waves. It's possible. An ending diagonal doesn't have to be all ABCs. I've seen some very weird diagonals out there. That's a combo of 5s and 3s. But if yesterday's low doesn't hold, we will revisit probably the low 5800s, potentially revisit the January low for a more complex wave 4, which I've shown here. Then this red wave 4 has turned into what we call a flat, which is quite common. I'm pretty sure you're aware of that, Dale.
Okay. Yeah.
I was just listening in before my interview here that you know your Elliott wave stuff. So this would then be what we call a flat, and this would then be of the irregular version. So these are all the flat types. There are. It's on my website, and the question always is it going to be regular, irregular, running, expanded, and any combination thereof. And this seems to be irregular because the B wave went then above the top of the third wave, and then we don't know if the C wave is going to go below A or not. You know, we can't predict the future, so we have to see if it's going to be running or expanded. I have labeled it here as a 1 and 2, which is just exemplary. Here's the 3 and 4, right? So we've done the A, the B, we've done the A and the B, because this still counts best as 3 waves up. I cannot make this into anything else but 3 waves, A, B, C. And that's the problem with diagonals as well. They're ABCs. So it's all ABCs. Just like this whole rally here from September into December was 3s, ABC. It's ABC, and then an AB, and then another ABC. So
does that smack of distribution, even though we could have one more hurrah that what's been going on since December? Yes. And, you know, even at new highs, maybe there'll be a lot of Mag 7s that don't make new highs, and certain groups that were favored will put in failing rallies.
Absolutely. This is like a market that's being dragged by its neck higher. And it means that the big boys are selling into it because they got the volume to make that distribution happen. And this is really being just dragged along like I really don't want to. And a good way to see that is if you look at, let's see here, the AD line. So this is the AD line for the S&P 500. And you can see it hasn't made a new high since November. And that's a bearish divergence. And that's one of the causes of the current decline, that we went higher, but due to this distribution, more and more stocks are not advancing anymore, right? You can see this is the cumulative advanced declining line. And if that one stops making new highs, whereas the market goes higher, we call this that negative divergence. And it's worrisome for the longer trend. Now, interestingly, yesterday, the AD line went higher. It's just one data blip, while the market went lower. So we have some internal strength yesterday. That's quite interesting. Some other BREF indicators were also up yesterday. So even though the market was down, internally, it didn't do too bad. And as you can see, it's not too far off, actually, from its highs. Even though the market has declined here in blue, the AD line is not doing too bad.
Yeah, true.
But as long as it stays below the November low, we have this long-term negative divergence. And why is that important? If I go back all the way to the 1920s, all bear markets, every single one of them since the 1920s, has been foretold by negative divergence in the AD line. Yeah. So this is the NYAD. I just showed the SPX AD. I just have longer data for the AD line for the NYAD. So then we plot the Dow Jones, which is more broad related. And you can see the 2008 crash foretold with months of negative divergence. Sometimes it takes years, like here in the 60s. It takes years. But these were not run-of-the-mill corrections in the 70s. These were 50, 40%, bear markets.
I think I remember.
I don't.
You were quick to say that. All right. So really the key, and it's really going to be screaming at us, is if we go to your target, was it 6250?
Yes.
And the AD line at that point is not making the new high. That's really going to be a problem.
That's going to be concerning. Yes, because then bigger picture wise, we're running into a much larger top. And again, past performance is never a guarantee of future results. But if we've had over 100 years of data that every time tells us if we get this divergence, we'll get a severe bear market, we have to assume that's going to happen next. And then we apply, of course, the Elliott wave to see if that's possible, right? If you apply the Elliott waves, and we go, yeah, that is possible to happen. Also here you see 6250 is still not really reached. It doesn't have to, of course, the market doesn't have to reach it. The price will tell us. So that's why we use for our premium members these warning levels. We say, all right, all the Elliott wave aside, it's really great if you anticipate another wave, but the market will tell us if we're going to get that other wave higher, yes or no. And by no, we mean if it starts breaking below key price levels, then it starts invalidating at some point the possibility of going higher. And of course, vice versa, it invalidates the possibility of going lower. So this is one way of looking at the rally since 2020. We can also find another way, which I start to like more and more, of the Dow Jones, which suggests we'll see indeed a larger top, but it's only going to be a third wave. We see a pretty severe fourth wave akin to 2022, and then still a massive final fifth wave. So it takes a lot before we can say the top is in. But yes, we do have to monitor for this AD line, because the word starts diverging, the words is going to get into the future. But again, it might take a while. It started here in 1956. It lasted till 1966 before we saw some serious pullbacks. And even within those pullbacks, the Dow Jones still managed to make in between new all-time highs. So it can be tough. But of course, the general return, of course, was pretty dismal here for about 10, 15 years.
Yeah.
So those are the two things we're looking at. Let's see here. So that's that one. And yeah, this is the final one that we indeed topped for wave 5. But again, it's very short of what we expected to do, since especially the third wave and the fourth wave did what they were expecting to do, meaning they topped and bottomed pretty much at the right Fibonacci extensions. And then we also expect that for the fifth wave to do. But if the market decides not to, for whatever reason, then that's what it is. So we have placed the warning levels for the bears here on the chart. So this is, of course, a bearish chart because we have wave 5 in this possibility completed. But if you go above the all-time high, which was only made 5 days ago, by the way.
Yeah. Right.
So a lot of people are extremely bearish. But we were only topped 5 days ago. So everybody was already screaming bear market. Wow, we're out real early. It's real early.
I
And
see
normally
you have a box up there up at 6,400.
yeah, it can go even to 6,400. Of course, we can always get a wave extension, right?
Yeah.
So I would probably make that box a little bigger. So
You think we're done by April?
Well, let me pull that one up for you. First and foremost, look at this, the fear and greed. It's a 22. 5 days ago, we topped at the all-time high. Excuse me.
Yeah.
That's a little extreme. And most of the time when there's extreme fear, start buying. Let's see, when could we expect a, let's see if I can find that chart. Well, I can actually post it here, show it here. Yesterday I posted on my X handle, whatever you call it.
Yeah, everyone write down his X handle, or knows it. Intel.
Yeah, at Intel Invest.
Yes. Yeah.
Thank you. So this is seasonality on average. And you can see it's pretty bearish in February. So the top part is all post-election years for the United States. So it's pretty bearish in February. That's so far so good. And this is just all years in the bottom line, all years, including all election years, post-election years, whatever, all 97 years on average. So also here, pretty bearish into end of February, and then pretty bullish into August, with, of course, the usual sell in May, right?
Yeah.
A dip. And also here in post-election years, which we're currently at, it's pretty bearish in end of February, and then pretty bullish into July, with, again, a little bit of bearishness here in March, April. But to be determined, it's an average. It's just an average. It hasn't really worked much, I must say, over the last 6-7 months. So it's just an average. I wouldn't hang my hat on it, but currently we're following this seasonal pattern quite well. So hopefully it's going to follow along, which would match with this Elliott wave count that we're tracking, and that we're going to see still this fifth wave rally.
Okay. Maybe it kicks off with Nvidia today.
It could very well be. Yes, absolutely. Again, sentiment is of course extremely bearish. It doesn't get much more bearish than this. 5 days after all-time high. Yeah. Some short-term indicators here are getting quite oversold. Every time this indicator, it's following, it's called PMO buy all, gets to 0 or close there to, you can see we get very, very good buy signals. And it's been on the sell since early February, a little bit early, because of course we made the first new all-time high, kind of stalled out here. But it's getting close to 0. I want to see it in the 0 to 5 box, and then every time that happens, you get very good buy signals once it starts going back up again. And with, of course, this extreme fear and a quite good seasonality ahead of us, and an Elliott wave count that suggests we might be completing either a larger fourth wave or within the midst of that fifth wave here. I think we should start to look soon higher again. That's my idea.
Do you think that this wave will take us out of extreme greed to extreme optimism, or just make it neutral? Because you would think a lot of major tops would be euphoric.
Yes. Yeah, you'd think so. Yeah, I think it will stay nicely bullish. Extreme greed, sure. I can't predict the future, but that tends to happen. Let's see here. Where was it? A year ago was, even a month ago, we were at fear. A year ago, we were at greed. And where were we a year ago? February. Let's zoom out. That's about right. We were here. This was greed. And you can see it can still last a while before you see a correction. So that's it's most of the time it's like the VIX. The VIX the volatility index is much better at the foretelling of bottoms,
Downturn.
right? Really spikes. Those are like singular events. Tops take time, and sentiment can therefore stay often bullish quite long. But bottoms are really single events. There's just too much greed of fear in this case.
You know what I've
another
noticed with VIX is, when it's down and it's, we've just had a rally, when you start to see it with the market higher, putting in little gap higher openings,
yeah.
it's really been a nice advanced tell. We had that this time too. That before the
Okay.
sell-off, we had a little gap up and the market wasn't lower, but people were starting to buy that protection. So it's actually turning into a good tell when you see that stuff. So the VIX is not dead or broken. You can still use it.
Oh no, no, of course not. No,
Yeah.
it just behaves the way that
Let
it
me ask
behaves.
you this. So after let's just move forward in time, and we complete between 2.5 and 4. What would you be looking for in the next 6 to 12 months after a top? A
Oh, after
crash?
that?
A crash?
Yeah, I think yes. Either we have topped majorly for a huge bull cycle, like that. So then we're probably going to go back to, I would say,
Wave 4.
probably the 2020 lows, somewhere
Oh,
around
wow.
there.
Wow.
Yeah, that's going to be not a because this will then be akin to the degree that I showed you here in the 1930s. So then we've completed the whole rally that started in 1932. So that was a super cycle too low, and we'll see something similar. But this was, I would say, a zigzag. And I think we're going to see something akin to what we saw in the 70s, like this up and down path of a very large super cycle fourth wave, which can, again, last a decade with big drops, big rallies, big drops, big rallies. And maybe that fits kind of where we currently are in the market, political and geopolitical environment we're currently in, and kind of heading towards this tug war between left and right, and I don't know who's in charge and who's not in charge, and nobody wants to participate with anybody because everybody else is stupid except us. So all that stuff.
I was thinking there is kind of a megaphone formation if you go back for a while. I came up with a megaphone. In fact,
Okay.
I know it's your interview, but I would like your opinion on something. Do you mind if
Of course.
if I just share it and
Please,
because
please.
isn't a megaphone like a classic example for a market that has those kind of swings like you're showing in the 70s? You have a
Yes.
little bit of that. In fact, that is a megaphone. So
Yes, correct.
people get bullish at the top and bearish at the bottom, and
Yes.
it's and our president, God, he loves a megaphone. So it could be a great
Yes.
it could be a great formation for what's ahead, a megaphone top. So anyway, let me see if I could just share that. I'd like your view on it because this is what I was thinking a while ago. Just go to here, and go to here, and then go to here, and then go to, okay, so there's the weekly. Okay, so this to me is a megaphone formation. We didn't get to the top. The top's probably up near 6,400 if we're going to go there. But here's the bottom. Here's the bottom of the megaphone. That would be wave 4 of less degree. A lot of confluence with moving averages coming in there and long-term trend lines. That we could actually have a sell-off to here and then go to 7,200.
That's definitely possible.
I mean, does that broadening top make sense to you?
Yes, it does. Yeah, I like it. I like the whole idea. Again, we can't predict the future, but that certainly makes sense from a fourth wave perspective that tend to have these megaphone broadening tops. The same you could almost see here in the early 2000s. This pattern here was kind of like a megaphone pattern as well.
Yeah.
And that was also, again, a fourth wave. And second waves tend to be quite deep and steep and fast. And the fourth waves tend to be this distribution pattern, as you can call it, wide and a lot of confusion going on, and a lot of counter economic streams. One thing is going great, and the other thing is not going well. So yeah, that's
everything's
definitely
great,
very,
and now there's a virus. Everything's
yes.
great. You know, I've noticed one of the strongest groups, and maybe we'll wrap it. It's been the financials, okay? And it's always been my contention, if we have a bear market, between commercial real estate and what's happening even in residential, and the bond books that all these guys have, long duration, that a problem's going to show up in banks. And
Yes.
that may be the leading thing. So they actually, a few of them, like B of A, looks like, you know, they're in topping patterns now.
Okay. Yeah, I haven't looked at the
So
banks in a while. I should.
yeah, yeah,
But there's
check them out.
so much to cover. You know,
I
so
know,
little
I
time,
know.
so
It's
much to
only,
cover.
you know, I think we have things pretty cased. You know, you made a great call,
Thank
and
you.
I think by next time you and I talk, we will have gotten to that 62 to 65 if we don't collapse here. And
I think so too. I hope so. Again, you know, where you say, well, November we're going to top here, and then later on bottom out there, and then rally there. And if that's happened, but we haven't gotten to that rally yet, you kind of still sitting and waiting for it, right? That's what we're doing.
Yeah,
but the market is taking its sweet time for sure. And you know, this whole thing here, however I slice and dice, it looks more corrective than anything else. It looks almost more like, maybe some people would call it at some point a bull flag, something like that.
Cup and handle.
Cup and handle. But you know, in the end, I will throw in the towel and sign off with defeat if indeed the market just drops below key price levels. In this case, we have to drop all the way below the September low here at 53.97 ish to tell me that, okay, we're done. So it's over. With, of course, already severe warnings if we start go below the January 13 low and some other things. But so that we've got some wiggle room. That doesn't mean you should just, you know, sit on your hands and wait for that to happen. I still think you should, you know, take some appropriate action if we start seeing things drop lower and lower and lower. But
I like where you have 2B. I like where you have 2B there, Arno. It looks like mid-March to complete this before we rally. That's like we're going to have a retrace and then another break.
Okay, yeah, it's very, very possible. Even that would fit with the seasonality I just shared, right? So you get this rally here, the B wave, and then the final C wave. It would match. We can make that happen, right?
And you know what else it lines up with? We're entering eclipse season, and I know it's not your cup of tea, but we have a lunar eclipse March 14th. So I'm just getting a lunatic vibe that could be a turning point. So, and then we have a solar eclipse at the end of the month.
Oh,
and we
wow.
have a change of seasons, 21st. So
correct.
You know, a lot of stuff happening this month.
Yeah, no, and it all matters. All of it matters. I just saw a post where there's some planetary alignment coming up. That's not going to happen until 2040. All those things matter. They do. Some matter more than others. But I think I don't laugh at any of those. I laughed, but it all matters because it does influence people's mood, and that influences their decisions they make in the financial market. So for sure.
Okay. Well, I'm in I'm in a good mood today.
Yeah, same here.
I got to talk to you. I always look forward to it, Arno. And
thank you.
How do people get involved with you?
They can just contact me through our website, and we're at intelligentinvesting.market, and there's many services that we provide, and you can just click on the menu, for example, click on any membership you'd like, either what we just talked about, stock market forecasting. We do the same thing for cryptocurrencies, Bitcoin and Ethereum primarily. You can sign up for where you get just daily emails about trading alerts for ETFs or the Magnificent 7 crypto trading alerts. Many ways. Just sign up. You get a 1-month trial, 50% off. Don't like it, cancel it. It's all good. Most people do like it, stay with it for a long time. I've had members now for 10 years since I've been doing this.
That's great retention in this
business.
Business.
Great retention. You always have a revolving door. You know, people.
Oh yeah, well The
That's
people
fine.
looking for the Holy Grail.
Yeah, well, sorry, it's not there.
Anyway, yeah, or the secret. The
Yes,
secret to trading. You know what I think the secret is, don't you, buddy? There is no secret. It's
Yes.
hard work and living through adversity. And if
Yes, it
that
is.
scares you, do something else. That's what I tell
Please,
people.
please, yes,
Yeah.
yes. I wish I knew everything
Get a
beforehand.
government job. Oh no,
Yeah.
they don't have any anymore.
No,
Well,
right.
yeah. Anyway, be a headhunter.
There you go.
Hey, let me wrap it with this. Do you think AI is going to replace guys like us?
Oh boy, I've got that question a lot. No, I don't think so. I think at
Okay.
some point the human factor is still very important.
All right. Well, that's good. I didn't think that, they could clone me or do a
I
hologram
think
of
we
me.
can work
AI.
together really well. The AI and humans can work together really well. I think that would be ultimate symbiosis. But just humans, no, we do need AI at some point. That's going to be inevitable. But only AI. What are we going to do? Nothing. I don't.
Yeah. Yeah. All right. Well, Arno, I hope 2025 is your best year yet.
Oh, thank you.
And,
Likewise.
and not only in the markets, in life.
Thank you. Likewise. Yeah, that'd be great. I'm looking forward to it. It went fast so far the first 2 months. Boy, they flew by, didn't
Yeah.
they?
I'll see you in May, bro.
Sounds good. See you in May.
All right. Arno Terscher at Intel_investing. And there's plenty of intel to gather with his work, in my view. Check him out. Check Arno out. Thank you, buddy. My trading warrior brother, Arno Terscher. Everyone, remember, don't just count your pips, count your blessings. I'll be back with you guys tomorrow, and good hunting the rest of the day. People are thanking you, Arno, and you could join the team in 14 minutes on the
Thank you.
morning edge. Find your edge, everybody. And it's not going to be one of those razors with 4 or 5 blades in it that don't work anyway. Anyway, adios, everyone. Thanks again, Arno. See you, buddy.